Millions, meanwhile, took to the roads and the skies this past weekend as the holiday travel rush officially got underway. What can we expect from gas prices in the weeks ahead? Joining us right now is the Schork Report publisher, Stephen Schork. Stephen, good to see you. Thanks so much for joining us.
It's great to be here. Thank you.
What's your take on where the market is right now? In a very short period of time, oil has skyrocketed to close to $60 a barrel again.
Absolutely. It's been a very strong ride post-Hurricane Harvey, Maria, this fall. And we have to always look about who's been doing the buying and who's been doing the selling. On the buying side, it's our friends on Wall Street. Right now, the length held on WTI, which is traded on the NYMEX, recently rose to a 36-week high. We also saw the short position, the bears, their position falling to a 30-month low. So clearly a lot of the strength has been predicated on a short squeeze in the market. A similar situation on the ICE Brent crude oil market, which is more of a marker for the global market. We recently, speculative length on Wall Street and in London, of course, recently hit an all-time high. Now, here's the key point, Maria. Who's been doing the selling? And the selling has been done by the producer, the only guy who actually takes oil out of the ground who has to sell it. So recently what we've seen now since the summer, the short position, the hedges held by producers in the ICE Brent crude oil market have risen 22%. They've hedged, Maria, enough oil since July to offset demand for an entire year. And the same situation holds on the NYMEX, with producers have now been liquidating their length. And as they've been, liquidating their shorts.
Right.
And as they've been liquidating their shorts, Maria, what's happened? U.S. crude oil production on a weekly basis is now at an all-time high. So you have to ask yourself, buying the speculator, selling the only guy that produces oil, and they're happy to sell at these levels.
Hey, Stephen, it's Mike Murphy. If this is, as you mentioned, just a short squeeze in the market, how long can it continue? I mean, can you measure what the short interest is out there and how much more buying could come in and how high that could drive the price?
Well, certainly we can measure it. And the way I measure it at the Schork Report, Mike, is we take the implied volatility. Well, actually, I use the statistical volatility, and we can marry that to the open interest. And then we can come up with an estimate of how much the speculator, how much anyone in the market is actually taking on risk. And when we look at these levels, whether we're looking at the risk margins in both the Brent market or the WTI market, we are still well below where we were just about a year ago at this time. Because remember, a year ago during the OPEC meeting, speculators went all in and at the time pushed their long positions to an all-time high. Now, of course, that didn't work out for them. They took on an exceptional amount of risk. We're only about 5/7 of the way to the risk they exhibited they could do last year. So certainly there is still, regardless of the fact that they're at records, there's still more risk that they are capable of taking on. So how high can we go? No one can tell you, but $60 in WTI, it's a nice round number. I certainly wouldn't rule it out in the near future.
All right, Stephen, we'll be watching that. Obviously, you're not a believer that this is actual fundamental demand in the backdrop. We'll be watching Stephen Schork.
I think we're at the top of the market.
We'll be right back.
Thank you, Maria.
Top of the market. Stay